Renaissance Technologies has averaged over 39% annual returns for more than 2 decades. Meanwhile, the average investor is struggling to even match the S&P 500. So what's the secret? It's not insider tips. It's not luck. It's AI, but not the kind you're using. While most people are asking ChatGPT for stock picks, hedge funds are running models that process billions of data points before the market even opens. In this video, I'll break down how top hedge funds are quietly using AI to beat the market, why most investors are completely missing the point, and how you can start thinking like them without needing a Wall Street budget. Interested in AI and finance? Hit like and subscribe. More's on the way.
Let's get one thing straight. Hedge funds aren't using AI to ask, is Apple going up tomorrow? They're building systems, models that learn, adapt, and execute with minimal human input. For example, some of the most successful quant funds use natural language processing to scan earnings calls, Fed announcements, and even Twitter in real time, not to read the headlines, but to extract sentiment shifts before the market reacts. Others are using reinforcement learning, training AI agents to run thousands of portfolio strategies, constantly optimizing for risk-adjusted returns, not just raw profits. And they're not backtesting over weeks or months. They're running millions of simulations every single day across different asset classes, time horizons, and volatility environments. The result? AI becomes less of a tool and more like a co-pilot, making thousands of micro-decisions with razor-sharp discipline, something most humans simply can't do. This isn't about stock tips. It's about building a system that never gets tired, never second-guesses itself, and never trades on emotion.
At this point, you might be thinking, okay, if hedge funds are using AI this way, can I just copy what they're doing? Here's the hard truth. You can't. And it's not because you're not smart enough, it's because you don't have access to what they do. Most hedge funds run on proprietary data sets, stuff you'll never find on YouTube Finance. Satellite imagery, credit card transaction flows, real-time order book analysis. Some even buy alternative data from private sources to track consumer behavior before earnings reports come out. And it's not just the data, it's the infrastructure. They have server farms running thousands of simulations per hour, models built by PhDs in physics and math, and most importantly, capital to scale small advantages into millions. So no, you can't just use AI and expect to compete with Citadel or Renaissance. But here's the opportunity. You don't need to beat them. You just need to borrow their mindset and apply it at your scale. Because while you can't replicate their systems, you can learn how they think. Data-driven, emotionally detached, systematically tested. And that alone already puts you ahead of 90% of retail investors.
So if you can't compete on data or speed, what can you actually do? A lot more than you think, if you approach AI the right way. First, stop using AI like a magic 8-ball. Don't just ask it which stock should I buy. That's a dead end. Instead, use AI to stress test your thinking. Let's say you're bullish on clean energy. Use a tool like ChatGPT, Claude, or FinChat to simulate arguments against your thesis. Make the AI debate with you. If your conviction still stands afterward, you're investing with clarity, not emotion. Second, use AI to break down complex data into actionable pieces. Not scraping billions of signals, but simplifying the noise you already have. For example, if you're looking at a company's 10K or earnings report, AI can help you extract trends in margins, risk disclosures, or R&D priorities, faster and more focused than scrolling for hours. Third, apply AI to portfolio-level questions. You can prompt AI to help you assess your diversification across sectors, or simulate how your holdings might react under different macro scenarios, like rising interest rates, oil shocks, or geopolitical risk. This isn't hedge fund level tech, but it is hedge fund style thinking, systematic, skeptical, and scenario-driven. Here's something no one tells you in those AI stock picks videos. It's not the tools that make you a better investor, it's the way you think, and AI can either sharpen that or completely distort it. Most people use AI to skip thinking. The pros use AI to challenge their thinking. Let me give you a real-world example. A former portfolio manager at Bridgewater once told me, the most valuable edge isn't finding the next hot stock. It's finding the flaw in your own idea before the market does. That's where AI becomes powerful. Not because it knows what'll happen next, it doesn't, but because it forces you to break your assumptions down into logic. You can prompt it. What assumptions am I making about inflation here? What are 3 historical cases where this thesis failed? If this trade goes wrong, what would be the likely reason? The act of thinking in prompts rewires how you analyze risk. You stop thinking in headlines and start thinking in frameworks like a professional investor does. So yeah, hedge funds have better tools, but mindset, that's the one edge you can actually build, starting now.
Let's recap what we've uncovered. Hedge funds aren't guessing better than you. They've built systems powered by AI to remove emotion, test ideas at scale, and execute with discipline. You can't match their data. You can't match their speed, but you can match their mindset. And that's where AI becomes your edge. Not as a shortcut, but as a thinking partner. The kind that pushes you to test your thesis, explore downside risk, and build strategies that actually hold up under pressure. If that's the kind of investing you want, clear thinking over hype, then this channel is built for you. I'm creating a full series on how AI is quietly reshaping the future of investing, from portfolio design to macro forecasting to real-time risk management. So if you want to learn how to think like a hedge fund investor without needing to be one, hit that subscribe button. The next video in the series, I'm walking you through a real-world simulation, AI versus S&P 500, who wins in 2025, and why most people are asking the wrong question. I'll see you there.